Hello, investors. Congratulations on starting your journey of learning to earn by trading. So, let's right away jump into it. In today's video, we'll be covering the Tradingview tools. Tradingview is this web app that I'm using and which you will be using. Tradingview tools, how to add watch list on the side as you see here, how to set alerts so you don't have to stay awake, uh, decide which type of trader you will be, and I will tell you how which I am. Then make money while stock goes up or goes down. Understanding the price action, which is drawing these lines, which makes everything very easy. At least make it look easy. Then this three lines you see, which are moving averages, my favorite tool. I'm sure it will make it yours favorite too. And the last step would be combining all the knowledge of this video to take your trades. And I will show you how I take my trades with proof. First of all, let's begin by putting you in the category of investor. So there are four types of investors or traders. So whoever buys or sells something is a trader in my perspective. So I call everyone trader. First is long-term trader, long-term investor, which trades in the time frame of years. If you are a long-term investor, you will buy a stock today, 2026. You won't think of selling it till 4 5 years, 3 years. So you deal in terms of years. While a swing trader like me, I pick up stocks that move very quick and I hold them for months, weeks. While particularly the word swing means swing. So here you see stock moves in patterns. So this is a swing in the upside motion. So my job is to catch this swing and then sell at the top and then wait for another swing. Zoom. I catch that. I sell at the top and then I again wait for another swing. So I like swinging. So that's me, swing trader. Then there's intraday trader. Intraday traders are like they trade within the same day. Mm, on Monday, Trump will announce that Nvidia stock will get some deal with China. Trump will announce that. So intraday trader would be very active on Monday, trade on Nvidia stock just because of the news. News will create volatility, gather attention. That's intraday trader. And it won't be you because they are quite skilled. And then there are scalpers. Scalpers are adrenaline junkies, I would say, and they nitpick. They look at they look at small moves, 2%, 1% within small time frames, 5 minute time frame, 10-minute time frame. Okay, so I'm swing trader. I prefer. I suggest you should be a swing trader to begin with. Yeah, let's first cover what trading view is. You have to go search trading view, make a free account. It is free. Don't be lazy. Just do it, and then you will have an interface like this. And this is everything. First step would be to create a watch list. So on the right side here, uh, I go here and I create a watch list. I name it test 2. I create a watch list. My new watch list is created test 2. Now I add stocks in it. My first one would be, so I go in the stock section. Then I have every country I want. I click on USA. Then I have USA stocks here, Nvidia. Either I can search them too. So I search Apple. I click on that. So I have two stocks in my watch list. So I don't have to search them each time. So I click on Apple. Now I go to full chart and ignore everything else. Now, as I said, time frames too many times. Let time frame be the first thing you learn. So I will unstar everything. You will be given something like this here. W means weekly. Weekly means each candle represents a week. Now here you see Monday 7 April 2025. I go to the next candle. It is Monday 14th, which means a week passed. So one candle represents a week. If I change the time frame to daily, then here it is 18 December. It becomes 19. So each candle is one day here. I will minimize this. Okay. Now, making things easier, I identify the time frames I use frequently and I star them. So I don't have to each times click on the drop down. Time frame covered. Now on the bottom, this is the timeline. I can drag it to squeeze it, to zoom it. And on the y-axis, we have the price. That's that. On the left side, we have tools to draw stuff. This has lines like this, then delete it. So yeah, lines, then it has shapes. My favorite shape, rectangle, rectangle. Now, the same thing here. I don't want to search each and every tool when I go there. I just want to star them so I can use them frequently from the bottom. So let me show you. If I start this arc, it will be added here. So that's a hack. And trust me, it will save your time. Watchlist and alerts. Watchlist covered, alerts now. Coming to the second part, alerts. Now, don't ask me why, but if I want to buy the stock after it crosses 2185 price, so one way is to keep checking it every day, every hour, that did it cross, where is it, where's the price. And another way is to just click on this plus and make an alert here. What it will do is when the price crosses this, I will get a notification here or even on my email if I want. Then I can check it here that yeah, this, you see, this is active, and when it is triggered, it will show up here. For example, in my previous alert was in Indus Tower was crossing 427 price, just like this will cross 25 21. So you can check your alerts here. That will make your life easier for sure. You see how many alerts I have. My God, money, money, money. Okay, so once you are done with this, now comes the crucial part: identifying where to buy, when to sell, how much to buy, many things. So there are two types of analyst. There are two type of analyst. One is fundamental analyst and another is price action based analyst. Fundamental analysts are the one who checks the balance sheets of the stocks, who for them the quarterly earnings report matters, this the corporate governance matters, and the government policies and everything matters. So they are like the economist. Second is price action, which I am both of them, but price action is the one this video will cover. And price action is applied everywhere, even in stocks, cryptocurrencies, commodities, everything. So price action means price action. Price is the chart you see here, the candle formation, and you infer them. You note the patterns they are making, where there are more volatile movements. So you identify everything like that and decide when to buy. And that's exactly what we'll learn now. So okay, so I'm seeing this chart for the first time, and what I will do is I will just look at it. I will identify some zones where the price is bouncing from time to time. And right now I see that here. So this will become where the price bounces from becomes a support zone. So I will quickly write it here. Support zone is the zone where whenever the candle touches or moves in that area, it reverses to the upside. So it bounces. Boom. Here, 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 here. Oh, let me quickly mark it for you. Bam, 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 bam. Now look at my arm. Look at my hand. Okay. Think of this as a ground floor and this as the first floor. You are a kid standing here and you want to jump. You want to jump in a way that you break the roof of the ground floor and land on the first floor. Okay. So uh, you are a kid, you jump, but you hit your head. You jump, but you hit your head on the roof and you fall down. You try again. You jump, hit your head on the roof, you fall down. So what does this become? This becomes a resistance zone, which I will shortly draw here. But then you take some pre-workout, you get furious, you want to jump again. Now after the pre-workout, you jump so hard that you break the roof and you land on the first floor, and the same roof that was a resistance becomes a support now. Now you try to jump again to the second floor, just like you did from the ground floor to the first floor. So this becomes your support. That's exactly what happened here. So this becomes kind of a roof for the ground floor. So the kid tries to jump here and he fell down. And he again tried to jump, fell down. So this becomes a resistance for the kid. But then he took the pre-workout and he jumps like crazy. And he jumps with full power. So he manages to break the roof as I showed. And then lands on the first floor's ground, which is the other side of the roof. Okay. So now he lands here. Now this becomes a support for him, which was once a resistance. And no worries, I will give plenty of examples for clarifying how to draw these things, how to identify them. Just stay with me. Okay. Now where do you enter for the trade? You enter here because the kid is notorious. He will try to jump again, right? So you enter here and see you would have easily got 50% return. Now again, if we try kind of same thing happens here. And, and as the kid is notorious, he again jumps, tries to go to the second floor, and he manages to break the first floor's roof, and he lands on the second floor's ground. So that's what happened here. It becomes a support. So we can enter here again, and voila, 70% return just like that. It's not that easy, but it is easy. Yeah, that happened with the kid. This was pretty straightforward. The support is horizontal, but it's not like that in every case. Let's go for Rivian stock. I will show you a angular support. So in here on higher time frame, weekly, you see the support is at an angle, but pretty clean, right? It bounces, 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 and this time I took advantage of this bounce. I bought it. I bought it and I enjoyed 60% gain on it. I did. You see the trade I took? I entered at the support near $13. and I booked most of it near the high, which would be around 74%. And now I'm 61% up, which would be somewhere here. So yeah, I practice what I preach, and I booked most of my profit here. The reason I did it, I will also show you that. Now, as I told you, support and resistance are not always horizontal. So this is a resistance, and it looks weird, but it works. You see here, it price went up and fell down, up and fell down. Similarly, here resistance, 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 resistance. So here my assumption was the same thing. The resistance is acting well, so I shall book some profits, leave the rest. And when it comes down, uh, previous resistance will become a support. So when it comes down, let me make this neat. So when this will come down, I will buy it somewhere here and enjoy the rest. So that's why I have a alert set here. So when the price comes here, I will buy some more. So this is a glimpse of the support. What else? Support and resistance. Let's understand one more crucial thing, which is breakout. And this breakout, the term, this will make you money within short time, speed money, dumb money. So breakout is basically anything that breaks out the resistance. So this is the resistance, it breaks out and gives an insane rally, 114 percentage. Similarly, another resistance broken out gave 64% easy. Now the reason why this moves happen is because I drew the lines. Just kidding. The reason is this is the place where institutional buyers come in. What does institutional buyer means? The big money, that is mutual fund money, retirement fund, the fund that private companies has. For example, the firm you work at needs to invest some money into stock market, so they will invest it. So big players, hedge funds. So what do they need to invest such big amounts? They need liquidity. Liquidity means they need sellers. If someone's selling, then only they can buy. So at this resistance, normal people like you and me who don't know much, they would usually sell some stocks or book some profits or book everything because they see the pattern. They see that it rejected the price rejected the resistance one time, second time, third time, fourth time can be any different, right? But no, it is different this time. So as soon as they sell, price increases. Oh my God! But then what did we learn? That it comes back and the resistance becomes the support. And that's what happened here. The resistance became the support. Boom, rocket. My God. Similarly, here, this is not a breakout, but it's kind of a retest. The resistance became the support. Boom. My God. Coming to the last part, moving averages, one of my favorite indicators. My only favorite indicators, not one of. So coming to the next indicator and the last indicator. So coming to the only indicator you need to know and which I love wholeheartedly is moving averages. And after we learn moving averages, we will combine everything we learned. We'll make a tonic out of it, and then you can trade on your own. I will give you some examples how I combine all of them. I will show you some real trades I took. Okay, so moving to the next indicator is moving averages. But before that, you need to understand what trend is. Okay, trend is your friend. Never fight the trend. They say. How moving averages help you to identify the trend. Then that's why trend is important. So you see here, you can identify that there is a downward trend going on. The price is going down. Zup, 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 zup. Okay. How do you identify when the trend will change? Like it did here. The trend changed. It went up, right? Again, same thing here. Trend down. Even if it's not down, then it's on in the side, sideways, not up or down, but side. Then it changed. Everything changed. Okay. So for that, we need this indicator called EMA, which is exponential moving average. You ignore the exponential, just remember moving average. To get this indicator, you search it here, EMA. And then you will get it in the first one in community. That's the one that I use. Now this indicator involves four of the moving averages, which is 20, 50, 100, 200 as you see here. Now, fancy words. But you understand what average is. And this is moving average, which means it adapts based on the candle's price. So here, this red moving average is the 21, which means it is the average of the past 20 candles price. So this red one is the average of the past 1, 2, 3, 4, 5, 6, just like that 20 candles. Similarly, this purple is the 200 moving average, which is the average of the past 200 moving candles. The reason the number is 200 is it's basically represents a year, but as there are holidays in a year, so we assume that there will be 200 uh, tradable days. So that's why there's 200 moving average. Now the use of this is you get the idea of the overall trend without looking at the chaotic chart. So let me just show you by hiding this. You see, the long-term investors tend to believe that the real price of the ASTS stock is this moving average. They don't care about the price going up, down, down. They don't know. They don't want the chaos. They just want to know the average price. And whenever the price comes touches this moving average, they become active like zombies uh, rising out of the dead. They become active. Wow! Finally, the price touched my moving average, which means the average price, which I think is the real price, and the real candle price both coincide, which means it's a buying opportunity for me. So the let me an idea. So the long-term investors would be super active in this zone whenever the price touches the moving 200 moving average. Similarly, the one who are trading in a lower time frame, who don't care about the past years moving, like 200 day moving average would consider the entire year's moving average because it represents 1 year. But the ones who only care for of 2 to 3 months, like me, swing traders, I don't care about what happened at the beginning of the year. I only care about what happened here. So I would use 100 moving average. Then some more short-term traders would use 50 and 20 moving average, right? So why I teach you this is moving average can be used for two purposes. One, to identify change in trend. I will show you how. Another is very, very important to identify momentum. So first we'll start with momentum. As you can notice one thing, when the price when the when the when the candles broke out of this resistance, as we learned, breakout, as well as the price went above all the moving averages. You see, above all four of them. That's where the momentum came in. Similarly, here the price broke out, but to get confirmation that it will really go up, when the price went above all the moving averages, that's when the rocket started. Similarly, here it was not much, but when it went above all the moving average, you see bam, bam, bam. Similarly, here resistance broke plus a price above all the moving averages. My God, 116 percentage. Voila, voila. Similarly, here above. So that's where you can find momentum. Now you need to understand one more thing, that the moving averages need to be tight, close to each other. Like they are here. They are here. You see, they are tight. They are in a closed territory. But here they are apart. There's lots of space in between them. When they are near, that's where algo trading comes into picture. Now I have a bot here, trading bot, which I won't explain to you much, but which buys when breakouts happen and as well as when the price is above all the moving averages. As you see here, when the price is above moving average, it says buy. When here the breakout happens or the price is above all the moving averages, it says buy. So this is developed by me, but there are, say here, long. So my indicator considers this, when the price is above moving averages, it considers to buy. Similarly, all around the world, people with different time frames, people with different moving averages based on their being investor or swing trader, they have alerts just like this, or they have automatic trading bots just like this, algorithms, which gets triggered when the price moves above the moving averages, or when the price touches some particular moving average like 200 or 100. So when the moving averages get squeezed, in this scenario, in this place, if I'm just using 20 moving average, I would have got the signal because the price went about 20. The one who is using 200 moving average, they would have got the signal because the price moved just about the 200. Similarly for 100, 50, and many different moving averages. So every one of them would have got the signal and the bots would have been active, and that's where the momentum kicks in. And that would be an homework for you to check this, fact check this, or back test it. That whenever the moving averages were squeezed, was there a violent move or not? Because you see here, violent move up. But when the gap is too large, then there's no move. It just roams around. But again, when they are squeezed through, boom, squeeze through, boom. So that's one use of moving average to identify momentum. Another is to identify change in trend. Now, you see here, trend was downwards, boring, blah 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 blah, down. No life, life sucked out of it. But here, as soon as the 20 moving average crossed every other moving average, that's where the trend changed. So that is where the trend went upwards. Here again, when the 20 moving average crossed above every other moving average, trend changed. This is not a real trend change because there was no real trend here, but in this case there was a trend. But here as I taught you, squeezing is happening, breaking out is happening, everything is in the right place. So worth a bet. Similarly here, if the moving average the 20 moving average goes below 200 and then crosses up, then it's a big trend change. But this is just crossing above the 50. It's not going all the way down, so there's not much trend change there. So one is trend change, second is identifying momentum. That's where the moving average is. And now we don't know the and now we know the technical reason behind it. Algorithms, bots like mine, they all are set based on moving averages. So I'll show you how I look at a chart with no back history with it. So first of all, when I come across this chart, I go for a weekly time frame to ignore the noise, and I identify a pattern of how much of a stock falls. So I go to an all-time high. I see how much it fell from there. Then I go to another all-time high. Here, I check how much it fell. Another all-time high, how much it fell. Hmm. So as per this, I have an understanding that it fell 55%, 40%, again 50%. So it falls 50%. There's no big deal in that, right? But another thing I realize in this is once it falls 50%, then there's a good chance of a reversal. So when I was watching this stock when it was somewhere here, I was waiting for it to fall for 50% to catch this reversal, and I caught it 50% upside here. I will show you. Then another thing I do is make the all-time highs as resistance. Here I will draw another one. See, all-time high. So I will identify a pattern here that when goes to all-time high and it falls, then it takes the support of the previous all-time high. So this is the previous all-time high. It takes the support here, right? Then it breaks the resistance. It takes the support of that resistance, that previous all-time high. Then it again breaks the resistance. It falls down and it takes the support of the previous all-time high. So following that, I caught this move. I caught this move, but coming to that later, we will also apply moving averages here. Now this is a conviction building exercise. So we don't just rely on one or two indicators, so like support or just how much is it falling down. We combine three, four, as much as we can. That's called conviction. That's where you are confident enough to put thousands of dollars in it. So considering the conviction we built based on the breakout, moving averages, support, and previous calculation of how far it falls from all-time high. This is one of the message I sent in my client group that if I were you, I would have somehow gathered all my savings and sell liabilities by as much ASTS this stock as I could, and it was sent on 2 December. So let's see what happened on 2 December. So this was 2 December and the price increased 60%, 1, 2, 3, 4, 5, 6, 7, 8 in 8 days without a major down candle. So it works for me. But if you are doing it, I suggest you buy it after it crosses all the moving averages. But I was pretty sure in the sector. I studied the fundamentals, so I knew somewhat about it. So it broke the resistance, kind of a retested here, and I was following the overall sector. But if even if you entered here, it would have been easy 40%. Okay, that's done and dusted. Similarly here, resistance would have been drawn, then I would have entered. The price was above all the moving averages. Then bam. The same thing I did with Oracle. Oracle. Now it is already drawn, so easy for me. Oracle also fell 43% from the all-time high. Again, fell 40% from the all-time high. This time was no different. It fell 48% from the all-time high. So I know 45% would be somewhat the reversal range. So I had my eyes on this one. And the same thing happened or will happen, I don't know. But the probability seems high. So the same thing with the retest. It broke the resistance, made this as a support. Then it broke this resistance, made this as a support. It fell down, took this as a support. It went up. Similarly, now this is back down and this will act as a support. So I have entered here. It is my second largest position. I am aiming for a good chunk of 74% gains. And Oracle is a giant. Don't be mistaken. So that's my game plan here. Let me show you ALAB. ALAB. In ALAB, you see when the price kind of breaks this resistance and is above the 20 moving average, it gives 162% gain here. Similarly, above the moving average, it gave 230%. This time it has broken the resistance. Also, it has retested on this resistance became support. And I am aiming for this 55% gains, somewhat with a stop loss of 10%. Not even 10%. I would be getting this as a stop loss 3%. If it goes below this, I will enter sometime, some better time with some more momentum. Okay, so this is my plan. I can show you many examples, man. I will give you one more last use case of this moving averages in averaging the ETFs. Okay, so this is one of the world's most famous ETF, QQQ. Now, in ETFs, you don't keep buying and selling. This is not swing trading. This is long-term investing. So, in ETF, what matters is timing of the average. By average, I mean adding more money to your current position. So here, I just go to a higher monthly time frame and look at a pattern that whenever the moving average, the 20 moving average is touched and the price goes up, there's a good rally there. So this would have been a good averaging price. Similarly here, then even with if 20 is rejected, even with 50 moving average, it's a good buying price. Similarly 20 here, it almost touched 50, so 50 again. So you can similarly here I can make an estimate that the price, if goes down, can go down 12% and touch this moving average. So I can set an alert here, or when it starts going down, I can sell here and make an alert here. Moving averages can be also used to assume how much can the price fall. So if the price is here and the moving average is here, so you know that it will come back to touch the moving average as a support. So it can fall from here to here. Yeah, that is that. What else? Do you want to learn everything at once now, huh? You big brain. Okay, enough then. It was my pleasure teaching you. Please be a good disciple and practice everything. If you don't practice, this is in vain. Please don't watch the video, but you already watched it. Okay, practice. You can, in the comments, you can ask me any doubts, or I will attach my social links there. You can reach out to me there. And best of luck investing.